Hey guys, let's talk market manipulation. Are we going to see some in the near future? Could we have already seen some this past week? The answer is yes and yes. But before we hop into the video, my name is Akil Stokes. I'm a Forex trader. I'm a trading coach over at tier1trading.com. And this is a weekly video that I do here on my YouTube channel. There's a lot more videos and a lot more content throughout the week. So if you're new, make sure you subscribe and do me a favor, hit that like button to show your support. Now, when we last spoke on Thursday, we were looking at the euro yen during the ECB press conference. We were doing a live session in the press conference, or the rate statement and the press conference was happening. And we had a very nice conversation about kind of the difference between trading and investing and putting the two together to look for that home run trade. And if you're new, a home run trade is where a technical setup is in alignment with a fundamental prediction, and you can shoot for bigger targets. And one of the things that we spoke about, or I guess we can go back to the basics for you guys that are new. When the currency market is different than other markets, because the currency market, instead of looking at an individual asset, we're looking at an individual battle between two assets. So when I spoke about the European yen, we're looking at the euro, we're looking at the yen. We're valuing the euro strength or weakness, we're valuing the yen strength or weakness, and then we're looking at how one weighs up against the other, and we're basing our trading decision on which we think will be stronger or which we think will be weaker. And me personally, I trade from a technical perspective, meaning that all of my decisions come from the chart, but in this unique circumstances, we had really a no-brainer type of outlook from the fundamental side as well. You see, the euro is beginning a rate hiking cycle, and one of the big things from the ECB press conference was talking about when this is going to happen, how it's going to happen, how big or how small it's going to be. On the other hand, the yen was basically saying, hey, we're good with a weak currency. We don't really have any intentions of doing anything. So you have essentially no-brainer good news coming out for the euro. You have no-brainer bad news coming out for the yen. Should be pretty easy to decide which one is the stronger currency. And the charts have shown that over the past really month or so. Now, the tricky part is this, right? If we go back to the basics of supply and demand, there's a difference between something being good and something being good to buy. You know, think about your local grocery store when you go shopping. There are probably products that you really enjoy, products that are no-brainer buys. You need them, you want them, you get them every single time you're in the supermarket or the grocery store. However, if the price of that product were to rise to a certain level, it would reach a point where you're no longer interested and you find an alternative. The same thing goes for trading and investing. Although this is a no-brainer buy on the euro yen, and although our outlook did say that, hey, we think it can go higher, there comes a point where the asset becomes too expensive to really get more buying interest. So you can have something that is a strong pair, but we still may see it decline. And one of the things I mentioned to our traders in the room was this, that the ECB press conference is going to be very important because I think the market wants something different than what they're going to give. And I had a feeling that the market is going to be looking for bad news. Why? Because bad news is going to drive down the price. And when you drive down the price, it's going to make it cheaper to buy. And ultimately, people want to buy. And we saw that a little bit from the ECB press conference, but we saw it in a major way this Friday when the Bank of Japan came out and said that, hey, if the yen keeps weakening, we may need to intervene. And if you look on your chart in front of you, you can see massive strength in the yen. Now, whether they will intervene, whether they won't intervene, I don't know. They have a history of doing it in the past. I remember I took advantage of it in 2000, I think it was 2011 when the yen, where they came out and basically said, hey, we're going to weaken our currency. And it was a free-for-all in the market. But it can also be a ploy to try to manipulate price action, right? Again, if you ultimately want to buy something, think of yourself as like an insider, right? Understand insiders, institutional traders, they move the market, not retail traders. Think of yourself as an insider. If you want to buy something, but it is currently too expensive for you to buy, well, you have to weaken its cost. What's the easiest way to weaken its costs? Well, you put out some news that goes against what most people are thinking. We know how people are going to react. We know it's going to cause the yen to strengthen. So red candles on the euro yen chart. That's an easy way to get it to a price where you're now comfortable buying again, so you can buy it up to the higher levels. Now, again, not saying that is happening. This is something that we're going to have to pay attention to throughout the week. But from a technical perspective and just knowing the market, it makes perfect sense. So we're going to hop into the charts and look at this from a technical perspective. And if you're new, I apologize for being a conspiracy theorist and all this fun stuff. But the more time I spend in the market, the more I understand kind of how these moves happen. And again, it really is one of those things, and this is something my first trading mentor, my business mentor, taught me, is whenever one goes left, start thinking about reasons why you might want to go right, because typically that is the best direction, right? The herd mentality is a negative. The herd mentality only creates situation for the minority to capitalize off it. So this could be one of those situations. And again, very important that you hear I say could, because we don't know. But as a trader or as an investor, here's what you want to do. As a trader, I'm watching the charts, right? In all honesty, I don't really care. I'm not going to stop trading. I'm not going to dictate my trading based off all this hearsay stuff. I'm going to follow the charts. As always, the charts will tell me what to do. If you're an investor, on the other hand, if you do take fundamental information into account, you just need to pay attention to the news feed. You need to watch this like a hawk. You need to look for headline news on Bank of Japan intervention, and you need to look for those little small nuggets that will affect that headline news, because again, those small nuggets are going to come out before the mainstream media hears about the intervention headline, so you can position yourself ahead of the move and be in a perfect position to profit. All right, let's hop into the charts. Again, if you haven't done so already, hit that like button, show me some love. If you have any questions about this or anything, just leave it in the comments section below. I know it gets a little bit confusing, and I apologize, but we talk trading on this channel, and I do want to talk all aspects of it, both technical, both fundamental, just any information that I have, I do want to share it with you, because this is part of my evolution as a trader, and hopefully watching this channel is a part of your evolution as a trader as well. All right, let's get to the charts. We're going to start here on the euro yen. I'm going to walk you through a little bit of a review of what we've been watching for the last few weeks here and explain to you what I'm looking forward to in the near future. But you can see the yen has been, or the euro yen has been on a tear. Really for the last month or so, we've been in a very impressive bullish trend, followed by the last 2 days of a little bit of pullback. And again, that's that Bank of Japan. Well, that's the ECB press conference first on, I believe it was Thursday we had that, then the Bank of Japan on Friday coming out. But from a technical perspective, let's take it back and show you what we're actually looking at with the euro yen. And to do that, we're going to have to hop up to the daily here, because we have recently broken our most recent previous structure highs over and over again. So in order to find the next level of relevant structure, we have to look all the way back to around 2014, right up here. And the level that we've had designated is this, really the beginning of the zone, kind of the most conservative point is going to be right here around 145 even, with the highs being up around 149.70s. And if I had to choose a sweet spot right in the middle, just draw a line in the middle, just, don't worry about the details here. I would say right around 146s to 147 is going to be that sweet spot. So what you can see is that, again, despite the really negative, I guess, week ending candle here on the euro yen, negative from a bullish perspective, I would say, we still think there is room to go higher, right? And this plays into what we spoke about earlier, right? Price has gotten very expensive on the daily, right? We have rallied all the way up from 132s to 144s essentially. And as you do that, as price gets more expensive, less and less buyers are going to be attracted to the market because you don't want to pay a higher value. So to see a little bit of relief, and sometimes that relief is triggered by certain news being flooded out there, to see some relief would be beneficial for anyone looking to get long. And as someone who is a pullback trader, if you're going to be a pullback trader or any type of trend continuation trader, this is typically the type of move that you're looking for, that relief, the trend taking a break, it pulling back a little bit to give it kind of a breather before hopping on the next wave. So the question is, if we are going to pull back, where are we going to pull back to? And well, something that my mentor taught me very early on, this is something that has stuck with me for years and years and years, and will probably stick with me forever, is look left, structure leaves clues. Our previous new structure high right here, once violated, that level of resistance should now act as our next level of support. There's even a little structure swap, if I kind of move this down, little structure swap zone right before that as well. Now, if we want some confluence there, we can take our Fibonacci retracement tool. I'm going to drag that from my swing low to my swing high. You can see this zone is going to rest, or rather I should say this, because I value structure first. My fibs, right, the 3D2 Fibonacci retracement and the 50% level are going to rest right inside that structure zone, giving me a good little idea of where to expect a reversal at. It actually looks like the previous retracement, if you allow me to get sidetracked real quick, yeah, the previous retracement down here comes in that same zone as well, 3D2 and 50%. So if we indeed have some harmonic movement, meaning kind of an equal or some type of equal-ish pullback, we may see that same zone be tested. So again, what we're looking for here is we're looking for price action to pull back into this level. Obviously, we're waiting for price to give us some type of clue that we're likely to reverse and continue up. We're not just putting limit orders there, or I'm not just putting a limit order there, but we're waiting for price to get into that level, and then we're going about collecting the rest of the clues that we need from the market to tell us that this is ultimately going to be a decent area to buy. If it happens, we're taking a trade. If it doesn't, we can patiently wait. This is only the beginning of the zone. This zone is technically relevant until we break our previous structure lows right here at 132.80. So this is one where you may have to be patient, but you also may want to pay attention to what's happening in the news, because again, if the Bank of Japan comes out and they are serious about intervening and get a little manipulation action going in there, we could see a sharp move downward, which may open up another opportunity, but we'll talk about that when that happens, if that happens. Next up is the dollar yen. So another yen cross, right? Kind of a similar situation. Dollar weakness, or excuse me, dollar strength, yen weakness. Massive bullish action here for a little bit longer than the euro, but massive bullish action here. And this is a very interesting scenario because we have a very good setup happening at a level that isn't ideal, but kind of is ideal, depending on how you view the market. And I'll get to that in a little bit. But I want to start off by looking at the last 2 days here in the market. And if you look at the last 2 days here in the market, right, we have some pretty decent candlesticks. I'm looking for my brush tool. I never know where it's at. I always miss it. And you think I would know by now, but I don't. Come on, Akil, where are you at? Finally found it. But we look at these last 2 days right here, last 3 days, right? Here's what we have. We have a very strong bullish candle. That's that first candle right there, number one. We followed up with two smaller candles, right? So a little bit of consolidation, but also very strong bullish candles. If you're serious about trading and specifically being a chartist, understanding technical analysis, you need to know how to read a candlestick. And a good friend of mine put out a post leading into the weekend about this, about the importance of understanding how to read a chart, the importance of understanding how to read price action, and the importance of being able to do so at the most basic level. And the most basic level is the individual candlestick. And, you know, we could look at that as being the micro. We could look at the bigger picture predictions being the macro. They both work hand in hand if you want to consistently find good trading opportunities. And when we're talking about reading a candlestick, I'm not talking about like just memorizing formations like Morningstar or three blind mice, whatever those things are called. I'm talking about being able to look at an individual candle, being able to read and decipher and understand the story that it's telling you and understand what that means for a future projection in the market. And if you want more information on that, we talk about it on this channel all the time. I'll link a video below. I'll try to find one if I can search through thousands of videos on this channel to kind of give you an idea of what I'm talking about. If I end up not doing that, just shoot me an email, akil@tier1trading.com, and I can shoot you the link personally. But what we have here is a very cool end of the week, the last 3 days. And these three candles are very important, right? Our first candle right here is going to be a strong bullish candle, right? A pretty high momentum candle. It has a wider range than the rest of the candles really in this entire series of upward movement. And we closed pretty much at the highs. A little bit of a wick there, but obviously we closed in the upper third. Now, the next two candles are smaller, so the range is contracting, which means a little bit of consolidation is there. But they are strong candles in their own right. They look a little bit different. They look a little bit skinnier because they have the wicks, but look at what direction the majority of the wicks are facing in to the downside, and then look at where the closes are, right? And if we break this down kind of piece by piece, we can look at it like this, right? So price opened here. The sellers initially pushed price down, which is good, but by the time the session ended, so the day in this case ended, the buyers had really regained all of those losses and were able to close even higher than the previous day's close. Boom. Win for the buyers. The next day, the sellers came back, right? Maybe they were inspired, they were motivated by something, and they tried the same thing. However, they did push the market down, but they couldn't push it as far down as the previous day. And the buyers still were able to make up for all of those losses and once again close the day with a higher high, right? So you got obviously the sellers getting beat up on this candle, and you get the sellers getting rejected on the first candle. You get the sellers getting rejected even worse on the next candle. You put two and two together, right? If you are a seller and you keep coming back into the market and you keep losing, you're not seeing any type of kind of, positivity in your direction, what do you eventually do? Do you come back and keep selling? No, you eventually give up and say, you know what? This isn't the place to go. I'll try again at a later point. And what you see is breakouts from those situations, because a lot of those sellers, even if they don't give out, their buy stops are right up here. Boom, once those are triggered, we see a big pop to the upside. So this is kind of a different way of looking at one of my favorite patterns, which is an ascending triangle as the lows keep getting higher and the highs eventually or essentially remain the same. And this is a good signal. If I can kind of break it down to a lower time frame, you can see it a little clearer here. Maybe an hourly is even better. Well, maybe if I erased all my junk accumul, there we go. You can see it a little bit better right here, that ascending triangle formation where we have a flat top, but higher lows. And again, probably on the hourly as well, you can see this, higher lows. You can see this on the hourly as well. This is a very good sign for a potential bullish breakout. So the thing that's tricky about this, and again, you do want to keep the fundamental bias in this as well. That's why I'm bringing it up. The thing that's tricky about this is the overall location. Unlike euro yen, where we had room to the upside, you're going to see that dollar yen here is basically right at a previous level of structure. Looking left, if we look left, boom, we're right there. We're right at a previous level of structure from back in 2002. Technically, we can move this up a little bit higher for the highs there, so a little bit below it. But we also have this overlapping level of structure here from back in 1998. And this is where things get interesting, because we've spoken about over and underlapping levels of structure before, all the time, I should say. But for you guys on YouTube, we've spoken about it before here on the YouTube channel. But if this is your first time watching, when we have these levels, I always assume that the higher level, or the more extreme level, the higher level in this case, is the one that's going to be hit, because this is another one of those tricks where traders see structure, they put stops right above structure. The market knows newer traders have stops right above structure, so they take those stops out and have fun with, at our expense. So it's an interesting thing, because my rules say I can't get involved because we're right at the highs, but I do think it's a decent opportunity, because I do think there's a good chance that these highs get tested. I honestly think there's a good chance that these highs get beaten out the water and we continue higher, to be honest. So that's going to have to be a decision that you make in your trading. And just as I mentioned before, right, with this breakout pattern being at a previous level of structure, you know that the sellers, right, that are interested not only have stops above here because of that daily and hourly and 4-hour formation, but they got stops above there as well because of that previous structure high from 2002. So again, if we can take those out, I think there's a good opportunity for us to really jump a lot higher here on the dollar yen. I've got a TikTok channel. I know it sounds weird that I'm on TikTok, but I got some really cool content over there, some really good quick tip trading videos, answering a lot of the questions that you guys have, giving you some daily motivation, kind of get you pumped up and ready to get into the market and be consistent and follow your rules. And I'm also expanding and talking a lot more about general entrepreneur type stuff, motivational, inspirational, productivity type of stuff. So a lot of stuff's going to be coming to that TikTok channel very, very soon. Some of it's on there already, but check it out. TikTok, Akil Stokes RTM, same handle as everywhere else on social media. And until next time, plan your trade, trade your plan. You have a great weekend.